God bless ya and welcome to my new YouTube video. I'm so excited about this one because I'm finally leveling up my quality, my video quality. I realized in my last couple of videos that I posted that I edited in the CapCut and then exported and uploaded, the video quality was trash. So I'm so sorry about it. I now studied how to export the video and how to get the best quality. So I hope this one will be higher quality, and I hope you will enjoy this video more than my previous videos. So sorry about it, but it's just, I'm just starting. I'm a beginner YouTuber, so don't be too hard on me. What will this video be about? I'm going to give you my blueprint all for free. I'm going to explain my strategy. I'm going to give you the plan, the rules. If you apply these two things, you are gonna make some really good changes within a month, within a couple of weeks, depending on how often you trade. But let's say you trade every single week, you'll be able to see some great change even after a month. I promise you. But you gotta stick to two rules, to the two rules I have: the strategy and the plan. So these two work together. If you only apply my strategy, but you don't stick to the plan, I'm so sorry, you're not going to be successful. So you can even backtest the strategy for a month if you don't believe me, but you really have to stick to my strict rules, or you can even adjust your own rules. But my rules are so strict, and that is why I don't have so many trading days as the most traders, or the most traders who are failing. So sorry to tell that, but if you're really taking trades every single day, then that means that you're desperate, because no strategy can work every single day. And you cannot be having an A plus setup every single day. That's not possible in these markets. So you're not gonna be trading every single day. I mean, if the setup presents itself every single day, wow, you can take trade every single day. But talking from my experience, that won't happen every single day. So you will be having some no trading days. You will be having trading days, winning trading days, a lot of them, and you will have some red days, which is normal. But this strategy is still over 80% profitable. I can promise you. But really, only by sticking to the plan, only by looking to the super strict criteria, only by following these criteria. So it's very simple, but it's still very hard. If you stick to these two rules, let me know after a month or two if you followed everything I explained you, and I'm so happy to help you become profitable. Okay, I will now start sharing my screen on my laptop and enjoy this video and take some notes and study it, watch it multiple times if it's needed, and I hope you will enjoy it, and I hope you will get that money. Alrighty, here we are looking at the tradingview.com. This is the website, the app I used for charting. And let's just start with yesterday, okay? I'm going to, yesterday it was a Wednesday, so let's move to the pre-market, okay? This is actually the trade I took yesterday, so you don't have to worry about accuracy. It's very accurate, and I can even post my trade from yesterday if you don't believe me. But yeah, this is my blueprint. Okay, I always start with the daily analysis, always. And let me write it down for y'all. Higher time frame analysis. Okay, that's the step number one. So you wanna look at the daily candles. You wanna see how the candles are acting. Okay, obviously this is a very bullish market. Very bullish market. Why would I think that the market wants to go down? Or why would I even assume the market is bearish? You see how we were creating a higher highs and higher lows, and how we are pushing all the way up, and then we had some small retracement, and then we're still pushing up, so we are bullish on a daily time frame. Let's see on a 4-hour. 4-hour, where is the text that I just, where did it disappear? Oh, okay, I have to move it somewhere super near to the candles, otherwise it will disappear. Okay, so higher time frames analysis means daily, 4H, 1H, 30-minute. Even though 30-minute, it's not like super higher time frame analyzed, but whatever. This is what I'm always looking at before I even, execute anything before I set my plan and my daily bias. So let's see at the 4-hour how the market looks like. So obviously we have some support right here, right? We have this, and this rejection. What is it? Support. Some kind of support, okay? So we're just gonna mark it out. But looking at the bullish, at the trend on the 4H, we are still creating higher highs and higher lows. We still did not break this low, so we are still kind of bullish. You see how this candle is closing? It's obviously that it's not showing any bearish pressure. So on a 4-hour, I would also say we are still bullish until we really break these lows and close bearish. We did kind of touch and break these lows, but we only rejected, so we are still bullish. Let's take a look at the 1-hour. Same, we still have this support zone. It's super simple. You're just looking at what is in front of you. If I have few rejections, these 3 rejections are off of the same level. Obviously, it is some kind of the zone, some kind of support zones. So let's mark it out. It's super simple. Why are we complicating? Just mark the levels of rejection. It is called support and resistance, and we want to be aware of this level. Let's see on the 30-minute. Same, basically same. We could also mark out this level right here if we want to have like even more zones. So yeah, we're kind of, oh, I hate this replay. That is some new feature, new adjustment. I don't know how to remove it, but whatever. I hope it's not too distracting. So yeah, just find the zones, just find the rejections, like the touches. Like we have 1, 2, 3, 4 touches right here. We have 1, 2, 3, 4 touches. Then mark it out as a zone, okay? We want to just look at those zones like the extremes. We're not going to be marking out every zone of rejection. Like we could even mark out this level, or even like, this baby level. Like I'm not gonna be doing that. It's too confusing, it's too complicated. I'm gonna be focusing on the shorter time frame, on what I'm seeing in front of me, but I'm gonna just mark out the extremes, like the outside zones, okay? This was on 30-minute. On 30-minute, we're kind of ranging. On 15-minute, we are ranging too. Okay, let's see on the 15-minute what the trend line is telling us before the market open. We are kind of in a downtrend. However, we want to be aware of this zone. What does it mean for me? Okay, at this point, I am like short term, I am kind of bearish, and I can mark up my supply zones. I can definitely do it, but I gotta be prepared for some reversal, because we have this support zone. We have this zone on all higher time frames. So we want to be ready if the price decides to reject and, continue going up, because that's the case on a daily 4H, 1H time frame, okay? So we want to be ready for this, but we want to also be ready for the scenario where the price breaks the support zone, maybe retests it and continues going down. So it's always two-case scenario, obviously. However, it's still 9:05, 9 a.m. in New York, so we want to wait for the market to open to be 100% sure what the market wants to do. So let's just write down the second step. So first step is always higher time frame analysis, which means mark up support and resistance zones. Okay. Lower time frame analysis, draw a trend line. Okay, done. No, what did just happen? What did just happen? Oh my gosh. I can't believe it. Like, whatever. I'm so sorry about it. Okay, let's continue to write down our steps. So first step is always start with the higher time frame analysis. Look at the daily, 4H, 1H, 30-minute, mark up some huge zones of rejections or zones of the touches, like the levels with the most touches. Then let's take a look at the 5-minute and 15-minute because this is the time frame where we execute our trades. Okay, I always like to draw a trend line because you don't want to just assume, okay, yeah, we are kind of in a downtrend. You want to draw a trend line. It really helps you have the trend in your on your mind. You don't have to always like look, oh, are we creating lower lows, lower highs? Just leave that trend line, okay? And you will always be aware of the direction. Okay, let's delete this because I don't want it to be super confusing for you. Okay, so now looking at this short um short time frame or low time frame, you could basically, this is what I did yesterday, you could mark out supply zones, okay? So this would be the supply zone. What is a supply zone? Supply zone is the last bullish candle before the huge move to the downside. Okay, we had this huge move to the downside. So this would be our supply zone, the last candle before this big move. Okay, and it's always the same. Before every huge move, the last bullish candle would be supply zone. Okay, these were not really some huge moves, but let's say this one, you would mark out this candle. Okay, it's always the same. This supply zone never got really retested, so we can delete it. And not every supply zone will be always tested, you know what I'm saying. So we're just marking it out, okay? So if the trend wants to continue going down and it wants to break this support zone, then guess what I'm gonna be waiting for? I'm gonna be waiting for the market to show me, okay, I want to continue going down. I want to break the support zone. Okay, I want the price to come back to this supply zone and show some really good rejection, like a huge wick or something. And then what I want to see, the next bearish engulfing candle. This is my strict rule. Mark up supply or demand zone on 5-minute and 15-minute, but preferably 5-minute. Wait for a rejection and for the next candlestick formation. Okay, this is the step number 3. After we're done with our analysis, after we're done with our setting our bias for the day, like short term, we're kind of having a bearish bias, but overall on a higher time frame, we are having a bullish bias. So if you want to be safe, if you want to be more profitable, more safe, you want to stick with a higher time frame analysis. You want to stick with the bullish bias. However, The trend can always change, and we cannot predict what will happen after the market opens. So if we want to take some sells, we have to set rules. Okay, I'm only going to participate on these sells if I see this and this, if I see a rejection, and if I see the next candlestick forming bearish, then I'm going to be entering a short position, like somewhere around here. Okay, my stop loss will be at the top of the supply zone, and my take profit will be whatever you want to have it. I normally like to set it at these swing lows, or maybe to be even safe at the support zone, depending on if you want to go for 1-1 or 1-2. It really depends on how confident you are. You can take your profits wherever you want to take them. Okay, so I marked out this 5-minute supply zone. Then I'm gonna also mark out the 15-minute, just to kind of have more confluences. And what I always also like to do, I like to see, okay, is there another supply zone below these zones or above these zones that I want to be aware of? Okay, so you don't want to be super confused. I'm just gonna have like few confluences, like I just want to have these zones on my mind, but I'm gonna focus on 5-minute only. Okay, so this is just extra confluence, like having 3 supply zones, one above other. It's a strong confluence. However, remember that we are bullish on a higher time frame. So if we see some huge rejection somewhere around these supply zones and we have a strong bearish candlestick closure, then this will be a go for me to participate on the shorts. However, ideally, since we are in a bullish market, I want the market to flip to the upside and give me some nice demand setup. This will be safer, okay? So this is very important. You will always have to adjust your bias. Do not stick only to one bias. Let the market show you what it wants to do. Okay, so higher time frame, we're bullish, but short time frame, we are bearish. It's still not 9:30, so guess what? We're not gonna just participate on the shorts. We are letting the market to show us what it wants to do today. Okay, so let's see. It is 9:30. The market just opened. Look at this candle. This candle is very bullish. It just invalidated our 5-minute and our 15-minute. Why? Because it closed above the zone. This means the zone is invalidated. It's super simple. The candle have to close or just tap in the zone. The candle is not allowed to, I mean, it is allowed, but if the supply zone is valid, we want to see just the tap or just the wick inside of the zone. We don't want to see the candlestick pass the zone or close above the zone. So 5-minute, 15-minute just got invalidated. I'm not gonna be taking any short, but we still have this 30-minute supply zone above it. Let's see. I had some days where 5-minute and 15-minute got invalidated. However, 30-minute, if it was really just above it, it played out. So it's just more confluence. But look at this. This candle just invalidated 30-minute supply zone. So guess what? Obviously, I'm not going to be looking for shorts anymore. Why? Not only the price invalidated all my supply zones, but the price also broke this trend line. Okay, you see this? It's super simple. This is the trend line. If we want to stick to our bearish bias, we want to see the price tap into this trend line and rejects and continue creating lower lows and lower highs. Guess what? The price didn't do it. The price broke the trend line and closed bullish above it. And what else did the price do? The price just broke the structure. We have the shift in the structure. It's super easy. You're just looking at what is in front of you. We're not overcomplicating anything. We're just looking at the trend line, at the supply zones. Okay, my supply zones just got invalidated. The trend line was broken. Guess what? Obviously, the market wants to continue up because we are very bullish. So we just defined our bias. We are no longer looking for short opportunities. We're just looking for the market to continue going up and give us some nice demand entry, because if we are bullish, if the market is going up, we're going to be looking for a demand zone. Okay, if we are bearish, if the market is going down, we are going to be looking for supply zones. It's very simple, but let me write it down for y'all. Uptrend, demand zones, entry. Downtrend, supply zone entry. Okay? Demand zone, the last bearish candle before the move to the upside. Supply zone entry, the last bullish candle before the aggressive move to the downside. Okay, this is for y'all, for the people who don't know how to mark up supply or demand zone, which is okay. You're just learning it. Okay. Oh, I just realized that we're on the 15-minute. Okay, whatever. Let's just play it back. So yeah, even on the 5-minute, obviously we invalidate all the zones and we closed bullish. We broke this high and we broke this swing high. So obviously we just reversed the trend line and we just closed bullish above the trend line. We just invalidated 3 supply zones. This is enough for you to change your bias. Okay, I hope this is clear for you. So as I mentioned, we are obviously continuing to go up, which I like because higher time frame is bullish. So since we're in an uptrend, let's see. We're looking for a demand zone entry. We are looking for the market to pick us up at some demand zone. So let's just continue looking at what the market is doing. Okay, finally, we have some bearish candle formation. We will mark it up as our demand zone. Okay, why? Because we are going up, then the price just retraced a little bit. It formed a bearish candle and then it broke this candle. It broke the high before it and it's continuing to go up. Okay, so what we want to see now, we want to see after this demand zone got formed, we want to see the move to the upside, and then we want to see the tap in this zone, a wick, whatever, even a candle closure within a zone, but with a wick. And then we want to see a bullish candle coming out of this zone. Let's see if the market is going to give us the scenario. You see this? This is a perfect example. This is a textbook example, but this is your criteria. I'm only gonna be taking trade if I see this textbook example. If I see candle closing here without a wick, like super bearish, this zone just got invalidated. You can't be looking at this zone, okay? We don't want to see candle closure below the zone. Okay, we want to see just the tap, or even, okay, the candle could close within the box, but it has to have some kind of wick. It can be super fat bearish candle closing within this zone because it will be invalidated for me. Okay, so now we have this tap, and now what we want to see is a bullish candle coming out of this zone. Boom, exactly what I wanted to see. This is the same trade I took yesterday. Guess what we're gonna do now? We're gonna enter a long position. So your stop loss will be at the bottom of the demand zone. You can later adjust it. I always trail my stop loss. My next stop loss will be at the bottom of this candle, but my first stop loss, just in case the candle wants to, you know, fake you out or chop around this area, you want to be safe. You want to give this demand setup some space, okay? So what would be the next level of liquidity, or the first level of liquidity? Where would you want to set your TP? So for me, it would be obviously this high, and then the next one would be this high. So you can even take some profits here and then leave a runner to the TP1. Okay? So, okay. So I normally enter a trade at the break of this candle, but this is not possible now since it is in a replay mode. But this is where I entered yesterday at the break of this bearish candle. And yeah, this is where I set my take profit. And then I even moved my stop loss to here. But let's make it simple for y'all. I'm so nerved by this replay sign that obviously I'm moving my chart the whole time. So sorry for that. Okay, so let's see what happened. As I mentioned, I got in earlier, but it's not possible since this is a replay mode. So let's see. Boom. There was not so much volume in here, but let's see what will happen. Boom. You can take some profits here. You can set your stop loss to the break even. Let's see what will happen. Can we leave a runners in this case? Boom. TP2 got hit. Just at, let's see, 2K. But it doesn't matter. It doesn't matter what the profit is. I would advise you to start trading with micros. Okay, not with mini. This is E-mini Nasdaq futures. You want to start with micros. You don't want to be risking too much. You have to have set your risk settings. You have to have a set stop loss and take profit. You are not risking more than you're allowed to. You're not risking, in the beginning, I would not risk more than 200 per trade. 200, 250, okay? Do not risk more than 1 to 2% off your capital, okay? Super simple, super textbook example. Obviously, not every day the chart will give you this opportunity, but that is why we're not going to be trading every single day. We're only going to be trading on the days where we have this nice zone formation, where we have nice tap, and where we have a nice candlestick confirmation. This is the only day we will be looking. This is A plus setup. We're not be looking for B setup, C setup. No, just be patient and have strict rules. Okay, so let's see, we had a step number 3, and step number 4 would be wait for the tap into your zone and for the next candle to form. Take a trade only if get in a plus setup. Okay, 6 would be have a stop loss and take profit. 7, do not risk more than 1% of your capital. And 8, take partial profit at TP1, leave runners. I mean, this is optional, this is up to you, but I'm gonna leave it there. Okay, so these are all my steps. Higher time frame analysis, lower time frame analysis. So setting the bias, marking up supply or demand zone on 5 minute, 15 minute, and even on 30 minute. Okay, this is not necessary, but I like to have more confluences. I like to have more zones marked up. But we want to focus on the 5 minute solely. Let's just focus on 5 for execution. In 15 minute, 30 minute is optional. Wait for a rejection and for the next candlestick formation. Wait for the tap into your zone. What I mean by tap, this is the tap, okay? If the candle comes just up to here, this is not a tap, okay? We want to see the tap. We want to mark out mark up the zone from the wick. I'm always including the wick and the body, okay? Some people are just marking up the body, some are only marking up the wicks. Honestly, I like both. Include the whole candle. This is the demand zone, this whole zone from the opening to the closing of the price. So mark up the zone correctly. Wait for the tap. Wait for the next candle. A lot of people wants to, they just want to enter aggressively as soon as they see tap, but we can't tell if the next candle will form bearish and close, close below it and then continue going down. It's all market manipulation. The market wants to do what it wants to do. So we're not predicting anything. We want to be safe. This is a high profitable setup. So if you want to have a high profitability setup, just follow these steps, okay? If we don't see a tap, if we don't see the next candlestick coming bullish, guess what? We're not going to be taking any trades. And I have a lot of days where I don't take any trade, and that's fine. But when I do take trades, this is a high probability and I end up winning. So these are the steps. These are the like basic vocabulary explanations, like what is a demand zone, what is a supply zone. So let me know if you need any more help. Let me know what should I explain in my next video. These are my steps, these are my criteria. This is what I'm looking for every single day. This is how I trade. Super simple, just basic support resistance levels on a higher time frames, then a focus on a shorter time frame with a trend line, having on your mind, marking up your zones, waiting for the market to pick you up. Super simple and super effective. Like, trading should not be complicated, trust me. If you simplify your trading, it's gonna be so much easier for you, and it's gonna be stress-free. Trust me, it's very boring. I have a lot of days where I just, I look at the charts for 2 or 3 hours and nothing happens, and I'm like, oh, I just wasted 2 hours of my time. But it's all part of the game. I'm still making money. So as I mentioned, this is a very boring strategy, but it's simple and it's very effective. It's very profitable. So if this style suits you, it suits me. I don't like be super stressed marking out every fair value gap, marking up every liquidity zone, thousands of zones and thousands of confluences. It's super confusing for me. It was not anymore, because I'm not trading anymore like that. But like, it was too much for me. So I like this strategy because it's so simple, and it is boring, but this just suits me personally. I got so disciplined trading this way, and it really makes me peaceful. I'm not stressing out. Like, even if this setup doesn't play out, even if the price, taps, give you a perfect tap and then give you the nice bullish formation, it might just come back and invalidate your zone. This is also part of the journey. I'm not saying that this will work out every single time, but trust me, speaking from my experience, this is a very high probability setup, okay? In my next videos, I will probably include even more examples, probably some supply examples, because the chart is looking differently every single day, so it won't always look like this. So I want to include as many examples as possible. Just let me know how you like this instruction, how you like this video.